June 21st, 2017. Let's take a look at the gold market. I've been negative on gold since November 2016 when gold broke down below the 30-week moving average and started trending lower in a stage 4 downtrend. What happened since then is gold continued to trend lower until the end of 2016, but has actually been rallying all during 2017 and has been consolidating around the 30-week moving average. And what's been going on essentially all this year is gold and gold stocks are now in a basing formation. And especially in the gold stocks, we'll take a look at GDX in a second, but the base is getting tighter and tighter in GDX and is setting up a big move either up or down. Sentiment in the gold market right now is what I consider to be pretty bearish. Most of the articles I see written by the gurus in the gold market and most of the sentiment I see slants bearish, and I'll show a poll I found on Kitco's website that shows the bearishness of market participants right now. Some of the gold stocks are actually taking good volume, however, and some of them have already moved into stage 2. And the US dollar has actually rolled over into a stage 4 decline and looks vulnerable given the fact that it has been unable to rally after the Fed rate hike. My website is nextbigtrade.com, and I've built a stage analysis screening tool that can be viewed at screener.nextbigtrade.com, and I can be reached on Twitter at nextbigtrade. Now, taking a look at GDX, if you go back and look at a lot of my videos on YouTube, I was very focused on this basing pattern in the gold stocks leading up until the end of 2015 and talked about the potential for a new bull market in gold. And what ended up happening in the start of 2016 is we saw a massive rally in the gold market, and the massive increase in volume kicked off a stage 2 uptrend, which was very profitable and lasted for multiple months. Now, what caught a lot of traders by surprise, I think, is how quickly this uptrend kind of rolled over and morphed into a downtrend. And as I said, by October, November 2016, the gold market was unequivocally below the moving average and no longer in a stage 2 bull market. And ever since then, it ended 2016 with a low, but really all during 2017 we've seen the gold stocks just consolidating around the moving average. And what this is really doing is setting up another basing formation. So you can see how when the bear market finally ended in the gold stocks in late 2015, we got this tight base which ended up breaking out into a massive up leg. And what's happening right now is kind of the same thing where we're basing again and it's getting tighter and tighter. Right now, the base is between 25 and 21 on GDX, and even over the last month and a half, it's gotten even tighter in the price action. So I'm very interested in this market right now because we're probably going to see an eventual breakout either higher or lower, and I kind of slant higher right now, but we'll just have to see what the price action does to determine what we should do. Now, what's interesting about the gold stocks is they tend to make a seasonal bottom in the summer, and more specifically kind of towards the end of June, early July timeframe. You can see on this longer term chart of GDX, I've circled the early July time period on each of these in each year, and you can see like in 2009, 2010, and 2011, we saw an important bottom right around the start of July. Same thing with 2012. Even though gold stocks were in a bear market at this point, we saw a major counter trend rally in 2012 and then kind of a smaller one in 2013 that started in early July. And actually, the final bottom really for gold stocks was in early July 2015, and the base set up the eventual breakout in early 2016. The only times that this kind of bottoming seasonality was negated over the last 7 or 8 years was in 2014 and last year, where the July timeframe ended up being an important top for the gold stocks. Now turning to GLD, I consider the 122 level on GLD to be kind of a very pivotal level because it's tested this level multiple times over the past year and a half and broke above it for a short period of time in 2016, but during the major move lower after the election, it sliced back below this level and hasn't been able to retake it ever since. And the volume at this level was pretty massive. So right now, gold is kind of tapping this level and has done this a couple times so far in 2017. And I'm interested to see if the basing pattern continues, and if we keep tapping this level, eventually the more times you test a level, you usually break it. So on the third or fourth try at this level, it should be pretty interesting for gold. Now the US dollar has been in this sideways trading range for 2.5 years now, and it tried to get above this trading range over 100 in late 2016 after the election, but after getting almost to 104 again in 2017, it's been weak for most of the year so far, and now is getting back to around the 96 level. And really this 96 to 94 level is a very important price range for the US dollar, because it's really, if this level is broken, it's going to be showing more of a massive kind of a topping distribution pattern than just a consolidation pattern. So it's going to be interesting to see whether the US dollar can stage a counter trend rally here, or if this bearish downtrend and kind of a new stage 4 so far in the dollar is really the start of something more significant for the US dollar. And again, I think the failure at the 94 level is going to be critical for the US dollar to hold if the dollar is going to remain in a longer term uptrend. Now turning to a gold stock, Newmont, again you can see how tight the price action is in this stock, and again this is a sign that the gold market's getting ready to make a big move in one direction or the other. Now again, for the taking a look at the sentiment in the gold market, Kitco apparently has been starting to publish a kind of their own sentiment survey, and the people they surveyed that have a Wall Street background and the Main Street background are both slanting towards the bearish side of gold, which is interesting because gold is actually up around 10% this year, and that's about a 6-month time frame. So that's a pretty long period for an uptrend for the market participants to be still pretty bearish, which shows how kind of, I think, kind of apathetic people are in the gold market, because there's been a lot of gains in other sectors of the market and gold really is going unnoticed right now. But if you're a person that uses stage analysis, you know that these basing formations are what really lead to big moves. So that's why I've got a keen eye on the gold market. And actually, as I tweeted on Twitter about a week or so ago, I've already actually taken some positions in some gold stocks, and I'm also noticing that if you look at the stage analysis screener on the gold page, a lot of these stocks are already taking above average volume. I've sorted the gold stocks by volume. You can see that these top 5 or 6 stocks here are all above, 2 times average volume right here and above 1.5 times average volume here. So there's already some movement going into the gold sector that's probably going unnoticed by a lot of people, but it's definitely something to watch if you're interested in getting into a contrarian sector. And again, for more commentary on stage analysis, check out my website at nextbigtrade.com. On my stage analysis page, there's a good explanation of the stage analysis trend following system and how it can be applied to virtually any market to use simple and price and volume action to trade the markets.